Hello everybody, this is Jose. We are 30 seconds away from beginning our session today. This is a sound check, so we can start on time, and that way I can confirm you hear my voice. If that's the case, which I understand that is the case, please go ahead and give me some confirmation on the chat box. Thank you so much. We are about to get started. Very nice. So we just arrived to the top of the hour. Thank you for your confirmations. Everything seems to be okay for us to begin the session. I would say everything but me, because I have one of those very, very bad colds. So hopefully my voice is okay, but we are ready to get started. Okay, so very good. Very good. Yes, good to see you all. Wonderful, guys. Anyway, so let's begin the session. Official introduction slide, and from there we'll begin, okay? So welcome to the session, everyone. My name is Jose Blasco. I will be your guide. Today is July 13, 2019, and today we are getting together for sharpening purposes. So the idea is to keep sharpening those skills. We use trading technology. We use the AutoUFOs app in our trades, but we are the human behind the app clicking the button, isn't it? So sharpening our skills, managing our emotions, all those things are critical, extremely important, and we take time when the market is closed over the weekend to be able to address those subjects. Okay, during the weekdays, we normally like to take advantage of the market itself and execute trades as much as we can in the 1 hour sessions that we also run during the weekdays. Okay. Anyway, disclaimer before we start: the following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. And that would be it for the introduction. So I got our beautiful trading view here. I also have TradeStation ready. Of course, I am also ready to take notes and make notes, and ready to sharpen our skills. Okay, just to give a little extra time for a few more of the UFO members to join us, since today it's the weekend, and I can see there is a little bit of a pattern where we always start on time during the weekdays, but in the weekend, which I understand, there is a little bit more relaxed as an approach when it comes to joining the session. So I wanted to remind you of something that many of you already know, but since every day we have new members joining us, it's also important. It's a long time I didn't take care of what I would call housekeeping. So let's do a little bit of housekeeping. First of all, there is a website which is very important for all of you to know of his existence, which I believe most of you should know about it. This is www.tradewithufos.com. Obviously, this is our corporate website if you wish, and there are many tools here that could be useful. Okay. Of course, this is where you click. The join button is where you click to subscribe. I think this is self-explanatory, just like the card, self-explanatory. There is an account button, which I believe that not all of you may be aware of that. So the account is a place within our website where you manage your username, your password, your profile. And this is important because there will be soon sections in the website where you will have documents that are downloadable, etc., etc. So you want to make sure your username is properly set up, and you have everything in there. Okay. So the way to get yourself an account, if you are not a UFO member, is very simple. You just click on join, and the moment you click on join, you can go ahead and click basic, which, as you can see, it's a free membership, and that will give you access to a username and a password, and therefore a profile in our website, and you will have certain benefits. And the boxes on the right, obviously, are to subscribe to the app itself. Very important, in the guide section, again, a little bit of housekeeping. In the guide section, we got a TradeStation guide, the Trading View guide. It happens many times. And I do the same myself, so this is not about kind of pointing at a typical human mistake, but many times we receive emails where you are asking questions where the answer is actually in the guide. So I know we are all busy, and many times we don't look at the guide, but again, strongly recommended. As you know, we put money in the market at risk based on how we use the app, so I would strongly recommend to either click on the TradeStation guide or the Trading View guide if you are using the app. Okay. And then the sample section is also very useful because you have samples and also examples. And in those two sections, you may find trading ideas that may help you to fine-tune how you trade. Okay, some of you are more experienced than others. Some of you are still in the process of defining how to trade. Some of you already know how you trade. So everybody's in a different place, but that sample section could be quite useful for that purpose. A little bit more about housekeeping. We have a YouTube channel, www.youtube.com/c/tradewithufo. Please, as we speak, you are utilizing the channel, isn't it? Because this session is broadcasted live via YouTube. So it's important for you to click on the subscribe button and also to click on the notifications button, the little bell, okay? You would see this on the upper part. I don't see it because obviously we are the owner of the channel, so it doesn't make sense for us to subscribe. That's why my buttons are different than yours. But in your case here, you will have a subscribe button and a little bell. Make sure you click on it, okay? And one last one about housekeeping inside TradingView. And this, by the way, it doesn't matter if you use TradingView or you don't. So maybe you happen to be a TradeStation user and you don't use TradingView. Still, could be very useful for you to come in here in tradingview.com. You can subscribe to TradingView for free. So let me give you straight to the point URL. So if you use the same as our website, tradewithufos.com, and then you add /TradingView, okay, /TradingView, this will bring you straight into a place in the TradingView website where you can get your basic membership, which is also for free. Okay, and this gives you access to charts and many benefits. So even if you happen to be using TradeStation, I would strongly recommend you to do that because you may know or you may not know that you have access to charts inside TradingView, and the beauty is that you basically have all markets worldwide in there. So you have the forex, the cryptocurrencies, you have markets in China, you have markets in Hong Kong, in Thailand, in Russia, in Italy, in Spain, in Canada, in Mexico, in Brazil, you name it. So you have all the markets and also you have the commodities and everything. So it could be very, very cool for you to get into those charts and just have access to any market you want. Let's say, for example, you want to trade Alibaba in the US market. It would be pretty smart to go ahead and take a look at what Alibaba is doing in Hong Kong and China, since it's a Chinese company, isn't it? So again, this is a great tool to have access to markets. And of course, if you choose to, you can activate your UFOs as well. And you have them on the go because TradingView also give you access to an app that you can download on your phone or a tablet. So now you have your flying UFOs on the go, which is very useful for trade management as well. Maybe a phone is too small as a screen to plan a trade, but to do trade management, to move your stops and so on is very convenient. Okay, so again, just a little bit of housekeeping as I was saying. And the last one here, when it comes again TradingView, when you're on the top, you can search, right? And you can search tickers, which could be stocks or currencies or commodities, so you can type here, I want to look at crude oil, right? And then automatically it will give you the crude oil. So you can get access to charts, okay? But you can also search for people, and in this case, people would be us. As you all know, our company is called Tradictive. So if you click on Tradictive, you get access to our page, and just like the comment I made when it comes to YouTube, where I was suggesting that you guys subscribe. So notice that we publish ideas, okay? So you also have the choice here to click follow. It's not called subscribe, it's called follow and like. So you can go ahead and click follow and like, and then as we keep posting trades, which we do every single day, you get access to take a look at those trades. Okay, those trades, I said that before, they're very basic, okay, but again, the trades that we plan in the get-together sessions are by far more advanced, but at the same time, if you happen to be a new trader and you're still in the process of defining how you want to trade, so those trades idea, you'll get alerted if you click on the follow or like, you will get emails every day, and you can go ahead and click on it, okay, and you get a full chart. Even if you're not subscribed to the UFOs, you get to see the UFOs on that educational idea, right? And that way, this could also help you in your learning venture, okay? Anyway, as I said, little bit of housekeeping. I would guess that most of you know this, but also many of you are watching this recorded, so this is for you, my friends. Anyway, so let's begin the day. And again, as I said, today I'm not in the best form as possible. So I may have to mute the microphone at times just to have a little bit of a hot drink so my throat survives the session today. So we'll keep it short today if that's okay. Today we are not going to run for 2 hours. We're going to do more like it would be like a 1 hour session today if that's okay with you. And the subject today, I wanted to touch on two subjects. One subject that was brought to my attention. I don't know if Marcos is with us today. If he's not, I'm sure he's going to be watching this recorded. So Marcos, very nice email when you send it to me. So Marcus was asking a question about overnight, how to manage overnight, especially when it comes to weekends. Okay, so sometimes we get into trades and we don't reach our targets before the market closes on Friday, and then there is a big question, which is should we leave the trade running or should we close the trade and that's it? And obviously, depending on what we do, there are sometimes very serious implications. So I would like to discuss today how to deal with the weekends. This especially applies to leverage markets, because if you are holding stocks in a non-margin account and you are doing this, like for example in the US, it would be a classical IRA account, or in the UK, for example, it would just be like what is known as a SIP account, or every country has different acronyms, but basically a non-margin account. So if you're holding stocks in an account which has no margin, well, that makes you a long-term investor, and that probably means that you don't plan to exit the trade until much later in time. Probably you are looking to collect dividends, all those things that we have discussed in prior sessions, isn't it? And therefore, the weekend is not a concern at all. You basically just let the weekend happen, right? But when you trade leverage products, think of a gap that could happen over the weekend, where let's say the gap is 2%, but you happen to trade a product on 100-to-1 leverage, so that 2% gap becomes a 200% P&L against you. And again, that would be if you had all the money of your account in the trade, which normally you would have less per trade, right? You don't use all your capital in one trade, but still a 2% times 100, that becomes now a 200% problem. Depending on your size, that could be a very, very problematic problem, even though I guess that this is not proper English to say it this way, but you got my point, and therefore it would be healthy to talk about it. Okay, so very good question, Marcus, when you see this recorded. Thanks for that, my friend. So that would be one of the subjects I would like to address today. And the second subject, basically, I'm just gonna open to questions that you guys may have. You are in a regular basis sending very good emails with questions, and hopefully we're doing a good job at giving you answers, but at the same time, sometimes emails are not the best way to give an answer. It's better to use a microphone, to share the screen, to go over multiple charts, to give you a proper explanation. And therefore, even though today was not planned as a Q&A session, I would certainly want to use the second part of the session to be a Q&A, because in recent times we've received plenty of emails, and I can see some of you are here today, so I think that would be great to give you better ways to do answers. Okay? Yeah. So yes, my friends. To be honest, I'm looking at your comments about community. So let me go ahead and let me see. Just give me 1 second here, guys, because I need to search for a URL. We do have a couple of communities, and it would be great that you guys become a little more active in there. That would be fantastic. This is about teamwork. I say it all the time. So I really welcome your question here, guys. Just give me a second. I want to find out the two URLs I would like to share with you. Let me see. So 1 second, guys. I'm working on it on my other computer screen. Let me see. Where are you? Okay, so I found one, and let me find the other one now. Okay, here it is. So Okay. Sorry for that, guys. Just bear with me. I just happened to copy the wrong link, but I have it here. So I just want to show it to you in a way that is neat on the screen. Here we go. Okay, so I'm bringing my screen back to you guys, and notice how we have a UFO traders group inside a platform called Discord. So the administrator is Maka. I'm not sure if Maka is around with us. Okay, but certainly if you guys are interested to being part, as you see at the moment, it's not like there are too many people connected in this group, but to be honest, this session is this platform Discord is quite advanced when it comes to the functionality you can have in here, because you guys within Discord you can share screen, you can share your voice, you can do all sorts of things apart from just chatting. Okay, so that's pretty cool. Hi Maka, you're here. Wonderful, nice to see you, Maka. So if you want to participate of this UFO group, Amaka, please lead me on that, because you created this group. So if you want to send me an email, our email is reach@tradewithufos.com. So what we could do is I can work with Maka, if you're okay, Maka, and I can forward that information to you, so you can have these particular UFOs traders invited to be part of this community. That would be great. And we have another community, okay, which is the UFO traders here. That one is inside Telegram. And again, we have a few of you part of it, okay, in here. And we have 14 members here. It's not a big number, but I've enjoyed very much when you guys get active in here, which for whatever reason you've been doing it randomly. Okay, sometimes you get very active, sometimes then you get quiet. Okay, so if you guys get organized, okay, of course, where I have control is where when we conduct the get-together sessions, of course, then I can lead you 100%. I don't have control outside those sessions, so that really depends as well on your engagement, but certainly those two communities are already available. Okay, and if anyone is a tech expert or an expert in communities and you want to make any suggestion to us, again, our email is reach@tradewithufos.com, and I'll be more than happy to accommodate or help to make this to become one more tool for you guys. Okay, and I see your comments there, Maka. Thank you so much. I kind of took your word before you made yourself, kind of available to do it, because I know of your passion. So thanks a lot. Okay. Anyway, so let's continue. With the session today. And again, be ready for your questions, guys. Okay. And if you feel like beginning typing your questions now before the end of the session, you can also do that. Okay. That's fantastic. So Maka will be posting a link right on the chat box. Okay. So you can just click on that link. And also I can see, Dirk, you're here. Dirk, I believe that you are the one who put together the Telegram group, isn't it, Dirk, if I'm not mistaken? So it would be great if you could do the same. That would be very useful, okay? And if you guys are watching this recorded as well, you'll be able to see the chat links. So that would be very useful for all of you. Anyway, so let's talk about the weekends, okay? Let's talk about the weekends. Thank you so much, Dirk, as well. That's really, really nice of you, and I'm sure very appreciated by everybody. So let's talk about the weekends, okay? So let's talk about the weekends. And again, it's like everything we do in trading, okay? One of the things that we have been learning together for a few months is that it's all about being mechanical, right? So the last thing that you want to do when a weekend is about to happen is that you have a trade and now you are wondering, oh my God, what do I do now, right? So if you ever find yourself in that position, it means you didn't have rules around what to do in front of a weekend, which means that you're going to improvise. And you may improvise using common sense, but even though you may be using common sense as you improvise, we are human, and therefore you will be impacted by your emotions. In other words, depending on what you would like the trade to be, you will probably decide what to do based on what you wish instead of what it really is. Okay, and that's obviously talking about common sense. That is common sense, which is a situation to be avoided. You never want to find yourself in a situation like that. Everything needs to be pre-planned ahead of time, so you know what to do and you are never being caught off guard or with no plan, right? And by the way, if that ever happens, okay, that's part of being human too. So that day, use common sense, may not be the best, but make sure that then you use the weekend to think about it with a cold head, so you know what to do next weekend. Okay, what you don't want to do is that this happens to you and then you never did something to fix it and then it happens to you again. Okay, so bottom line, we need rules. It's always the case, it will always be like that, and this is what differentiates a professional trader versus an amateur. Amateurs sometimes make money on luck. Professionals rather make less money by following rules, because we know that it will bring consistency through time. Okay, and by the way, if it brings consistency through time, then professionals will overpower by far the amateurs all the time. Okay, so you can be lucky one time, you can be lucky twice, but it's not going to happen. You're not going to be lucky forever, right? So we need rules. Okay, and again, this is nothing new, but I wanted to make a strong point. Okay, I believe something that will really help Sharpening-Weekend would be a flow chart. Yes, and I am working on that. And I said that it's actually a long time ago when I said it. Okay, but I will keep my word, my friends. Okay, I'm working on putting together a flow chart. It's just that there are still certain things I am in the process of teaching, and I would like that flow chart to incorporate everything in it. Okay, so I'm just taking a little bit of my sweet time, if you wish, as we're working together as a team to get there. Okay, but we'll have that tool, and I 100% agree, and I'm sure that everybody in the group will agree. But on top of that, if you happen to be a mindset, which is a little bit, let's call it like an engineer type of mindset, like an accountant type of mindset, like an architect type of mindset, where you think in a way that is very structured and methodical, of course, not only you would appreciate that, you actually need that. Okay, so we're getting there. Lisa, we focus on the S&P and the NASDAQ during the short-term sessions, but many times there are no trades set up. Do you have a list of other symbols that you would like for short-term? Yes, very good one. So I'll address that one after I'm done with the weekend. Okay, that's a very good question, Lisa. Thanks for that as well. So now, so again, back to the weekend. So first point when it comes to the weekend is that you need to have rules. You never want to find yourself without the rules. Okay. Now those rules. Okay. Let me grab a piece of paper. Okay, so I can make a few notes. Okay, those rules. I'm going to separate those rules in two different groups. Okay, and again, after I explain it, you may decide, you know what, for myself, I would like to keep it, simpler. I would like to deal with it in a different way, and then instead of two sets of rules, you have one set of rule. It's okay. Okay, but let me give you both rules so you will be able to evaluate that. Okay, so rules for weekends. Okay, so the rules for the weekends. So the two rules, I'm going to separate two sets of rules, okay? And the reason why I'm going to do that is because one set of rules will have to do with after reaching safety target or without having reached safety target. In other words, probably it's clear for everybody, but just in case. So we always plan trades with a final target. We obviously have an entry and a stop, correct? But we also use somewhere in the middle a safety target to remove the risk of the trade. Right? This allows us many things. For example, this allows us to execute multiple trades in parallels without increasing risk. So if you took a trade, for example, Lisa was talking about the S&P and the NASDAQ. So let's say you took a trade with the S&P and you just reached safety target. Well, now you cannot lose anymore. So what do? Well, now maybe you open a new trade with crude oil. And it doesn't mean you are doubling your trade because you already remove very quickly the risk of the first trade. Okay, so for the weekend, it's kind of the same. It's not exactly the same, but it's kind of the same. If you have already reached safety target, obviously, in the theory world, you have removed the risk of the trade. And you will see why I said in the theory world. Because for the intraday trade, it's not a theory, it's the reality. You have removed the risk of the trade. For the weekend, it's going to be different. But for now, let's call it in the theory world. So in the theory world, you have removed the risk of the trade. Therefore, leaving the trade alone over the weekend, if that particular, let's say, is Forex, let's say that particular Forex currency pair is still moving towards the final target, but haven't got there yet, leaving the trade alone is okay, because even if after the weekend, you have a gap down and the market moves against you again, since you already reached your safety target, this trade is not likely to suffer anymore, right? So, one type of rules to be applied would be what to do if you have already reached the safety target, okay? And one very easy option is leave the trade alone, okay, since the theoretical risk is no longer, okay? Okay, there is no risk anymore. Okay, now again, notice I'm pointing at theoretical risk. So I believe this is crystal clear, and I don't think I need to explain myself too much unless you have a question, and I'm happy to re-explain it. But I would like to point out the fact that I keep talking about that theoretical risk. Okay, so why do I keep talking about theoretical risk? Well, the reason why I talk about theoretical risk is because what may happen over the weekend is that you may have a gap. So let's pretend that you had a trade, okay, where you bought a currency at 112.00. Let's do the math a little easier. Let's say you bought a currency at 112.20. You had a stop at 112.00, so you're risking 20 pips in this case, okay? Safety target, of course, is going to be 20 pips above, so it's 120.40. And let's say your final target is 113. So let's say that was the trade. Okay, and you already reached 112.40, and you scaled out already 50% of the trade. Okay, so if you already scale out 50% of the trade at the safety target, and that currency was to go down and hit 112.00, which is your stop, then you're going to lose 20 pips with half of the size, but you have also made 20 pips with half of the size. So basically you are breaking even. As you know, this is nothing new, right? So you could certainly leave the trade alone, and it makes a lot of sense. But again, that's in the theory world. Why? Because what may happen over the weekend is that you may have a gap. If you were to do this intraday, okay, and the market, let's say the market reached, you went as far as 112.50 when the market closed on the weekend, okay? So Friday close. So if this was to be intraday and the market is going to fall, it's going to fall to 49 and then 48 and then 47 and then 46. And if it ever reaches 112, you'll get filled and you may get some slippage, but that's it. Okay? But that's it. Where if you are doing this over the weekend and you have a close at 112.50 and then something impactful is happening over the weekend, like for example, I remember, I think it was July 2015, Greece was voting to leave the EU, for example, right? Or we can talk about the Brexit, for example, the major events that could affect certain currencies or commodities or markets, right? So what may happen? Well, what may happen is that the Friday close is 112.50, but when the market reopens, okay, on Monday morning, okay, so Monday morning Asian times, okay, which is Sunday night in Europe or Sunday afternoon, evening in the US, depending on where you're in the world. So that's Monday morning Asia times. So what if this currency opens at 111.80? Okay, in other words, you got a 70 pip drop from 50 to 80. It's a 70 pip drop that happened over the weekend. So what's going to happen? Well, yeah, your stop that was set at 112 will trigger, but you will not get filled at 112. You will get filled at 111.80. So in other words, you lost more than expected. Okay, you lost more than expected. So in the theory world, you were in a risk-free trade. In the real world, there was still risk because of the risk of gaps over the weekend. Okay, so what to do? Okay, so option number one, leave the trade alone, because in reality, 70 pip gaps. I'm making up those fears, but in the real world, 70 pip gaps, it's not too common, right? And if it happens twice a year, so my friends, that's trading, okay? So you can leave the trade alone and that's it, okay? And that, by the way, that would be my choice, okay? Of course, I would also know, okay? I'm gonna add another parenthesis here. I would also know what's going on out there, Okay, in other words, if there is any fundamental risk, okay, if there is any voting in some part in Europe, in this particular example, if there is something important that could happen, then I would be aware of it, and that may change my mind, and I decide, you know what, I'm just going to take this smaller profit and I'm done. So that is okay, but most of the cases I would just do nothing, because the reality is that once you have reached target 1, having a crazy gap against you could happen, but in the end, because you already reduced half of the size, well, you would lose a lot, but with half of the size, which is in the end is not that much, and is part of trading. You could have got stopped out on the full size without reaching target 1 and lose 20 pips with the full size. So now if you got double the move, you're going to lose half, because it's half of the size on double of the move. So it's not, you can survive that. Does that make sense? So again, leaving the trade alone, it's a valid choice, but remember, in the theory world, there is no risk anymore. In the real world, there is still risk. You could have a gap. So leave the trade alone is one way to do it. The other extreme would be, no matter what, so a no matter what type of scenario, close the trade, before the weekend. Now, if you do that, if no matter what you close the trade before the weekend, I'm not going to say this is wrong, but this certainly limits the type of trading that you can do. So you cannot be a swing trader anymore. You are just doing long-term intraday. You can be in a trade for 2 days, 3 days, maybe 4 days. That's it. So if you want to open the door to do swing trades, to do long-term trading in Forex, if you want to open the door to do carry trades and collect interest rates on leverage, if you want to do all those things, then you cannot do the first choice. So the first choice, it's I would say is not, not the best. But it's a choice. So normally you would determine, have I reached target before the weekend, or have I not reached target? So if you have reached safety target, choice number 1, leave the trade alone. Choice number 2, close it before the weekend. And in this case, you close it before the weekend because, having not reached safety target, you are concerned about the risk. And one choice in the middle, which I'm going to give you, and I'm going to give you 3 choices, and basically you have to pick one, and now you make it a rule for yourself, and that one needs to match your personality. So the choice in the middle will be, look at the UFOs, and if the UFOs still support your trade, then stay. If not, close it. So example, let's say you are doing trades with the New Zealand dollar, Canadian dollar, where you are using the 240-minute time frame as a market environment time frame. This is your common time frame, and then you're using the 21 time frame as the edge time frame. And let's say some candles ago you had a close above. Actually, the prior candle you had a close above. And in this last candle you got into a trade. You got into a trade. Actually, this could certainly be an opportunity. So this right here, this was a UFO that was pure green, and it became olive green instead of pure green, because as you can see in this candle right here, it's a candle that came back into the UFO, kissed it, and moved away. So you still got on-field orders, but less. So let's say this is you, and let's say you took the trade here. With this move up, you may have reached safety target 1. So you are out of the trade. But now the weekend is about to happen, so the question is, do you close the trade here over the weekend, or do you leave it open? That's the question. And again, option 1, leave the trade alone. You already reached safety target, leave it alone. Option number 2, just close it. It's before the weekend, just get out. But remember, this will limit you. This will limit you. And option number 3, which is in the middle, is look at the UFOs, and if the UFOs still support your trade, stay. In this case, notice that you still have UFOs between the current price and where your stop would be. Your stop would be below the UFO, isn't it? Somewhere here. So between the current price and the stop, you still got a UFO. So what do? Stay. Let's say you didn't have any UFO anymore. So what do? Leave. Close the trade before the weekend. Okay? So this will be very valid set of rules. Okay? Very, very valid set of rules. Everybody with me? You guys can confirm that you are with me on the process? Yeah, Bojan was asking about the links. Okay, so if Maka and Dirk, if you have the links to the groups, it would be great if you can post it here on the YouTube. That would be great. Wonderful, perfect. Thank you so much. So what is the other case? The other case is, what if you have not reached the safety target? Okay, and we are about to get into the weekend. Oh, you posted it already? Oh, you know what? I don't see it on the chat box. I don't see it, Maka. Let me see. Yeah, it's funny. I don't see it. Yeah, I don't see it. I don't know, something weird. If you could repost it, it would be great. Thank you so much, Maka. Cool, thanks a lot. So anyway, so now, what if you didn't reach the safety target? Okay, what if you didn't reach the safety target? Okay, so let's say your safety target, you took this trade, okay, and let's say the safety target is all the way there, and price went close to it, okay, but didn't reach, okay, you stopped there, and then price started dropping, and now the market is about to close. So what do? Well, I'm going to give you a couple of choices here as well. Choice number one, get out. Okay, get out prior to the weekend close. That's a very valid choice, and this will be my favorite choice. Okay, as a trader, I love to be very aggressive taking profits, but I am a little more in the coward side, if you wish, when it comes to taking risk that is not well controlled. Okay, taking risk, I love it, but when I lack control, which is the case of a weekend gap, my personality is quite how do you call it, conservative, if you wish. So, you know, getting out prior to weekend close is something I do. Okay, and again, some of you may be less conservative, so then I'm going to give you a second choice. And what will be the second choice? Okay, is reduce the size of the trade by 50%. Okay, so close half and leave the other half. Okay, and the third choice is like before. So reduce the size of the trade if the UFOs still support your trade. Okay, if the UFOs don't support the trade, get out. If the UFOs support the trade, then close half of it. I'm giving you three choices, so that way I think that I am adapting to all of you, because all of us are different, and remember the implications of the mindset in trading. We are all different. The way we trade, I mean, the methodologies on how we trade are the same. It's all about the UFOs, the on-field orders, but the rules that we put around the methodology, especially when it comes to risk management, those have to be unique and match our personality. Because if not, you would never be able to be comfortable and therefore manage your emotions. Okay, and you need to reach a level of comfort so you take decisions which are objective instead of decisions that are too influenced by your emotions. So you need to make sure that your rules match your personality. Okay, that's why I'm giving you three choices. My favorite choices, as I said, and this is just sharing, is get out prior to the weekend, okay, and leave the trade alone. Those are my favorite choices. And one of the reasons is because it's simple. I have very little to think, so I can act quickly and never find myself in the situation of what to do. The other two decisions I gave you per group certainly can be taken quite easily, and also with the UFO there is no subjectivity, right? You just load the UFOs, and if you have them, you stay, and if you don't, you leave. it's quite simple. But at the same time, in my mindset, in my mind, it's I like to keep it as simple as possible. Okay, so those will be my particular rules. But again, I'm giving you a little bit more choices because we are all different. Okay, and basically this is how you would deal with the weekend gaps. Okay, and this has another consequence. Okay, especially if you're gonna use this rule. Okay, the one that I said where you get out prior to the weekend close if you have not reached safety target 1. So if you're going to use that particular rule, there is another implication. Okay, you need to have a time where you stop trading. Okay, and this to me is Friday, afternoon hours here in Asia, which that would be Friday morning hours in the US. And the reason why is because if you don't catch that beginning move when the US market opens, then normally everything moves, including currencies, commodities, treasuries, everything moves, right? So if you don't catch that initial move, you may not get to safety target 1. Therefore, you will find yourself many times entering trades, closing before the weekend. So, basically I have a rule where if I don't get into a trade before a certain time, then I just cancel my orders and I don't trade. When I say I don't trade, I mean I don't enter new trades that would be exposed to weekend risk. Okay, a different story is to trade intraday or to keep other positions that I had entered much before, which those other positions already reached safety target 1. Is that making sense? So those I will leave them alone, as I said on the top part. Okay, but again, if you're gonna have this rule that I'm pointing out on the bottom part, you also need to be aware that this has another implication, which is you need to set yourself a time for you to stop trading when it comes to entering new positions that will be exposed to weekend risk. Okay? Yeah, very good. So I can see that there is some sort of a problem posting the link. Okay, so let's do that, guys. Anyone that you're watching this live or recorded, if you want to have access to those communities, send us an email. So again, it's reach@tradewithufos.com. Send us an email, and then I'll be taking care of forwarding that to you guys. We'll have the team take care of that. And Maka and Dirk, again, thank you so much, guys. So anyway, questions about how to manage the weekend trades, guys. It's if you think about it, it's very, very simple. Okay, but the key is never find yourself in a situation where you never thought about this and now you have to take a decision, because that would put you in trouble. Especially the worst thing that could happen to you in a situation like that is that you didn't have rules, you took a decision, maybe it was not even the good one, but then you got lucky and you made money. So what did just happen? You just fed your mindset, where now your mindset believed that doing the wrong thing is the right thing to do, right? So dangerous. Okay, so dangerous, especially as you keep adding size in your trades. There is one day where you'll get hurt, especially because these weekend gaps that are very problematic, they happen rarely. Okay, those countries leaving the EU, for example, stuff like that, this doesn't happen too often, right? So those crazy gaps, they don't happen often. And therefore, if one day you did it and it worked in your favor and you made money, you may keep doing it for many more times while you have increased the size of your trade and your skill and your accounts and everything. And the next time when it happens and it hurts you, it's going to be with a much bigger size. Okay, so again, let's be professional. Let's have rules, as we always say. I know it's common sense, but again, part of being human is that sometimes we don't give priority to this and we just think about other things until we get badly hurt. Okay, so everybody make sure that you incorporate these type of rules to your arsenal of rules. Okay. Thank you so much, Bojan. Very nice of you. Yeah. Yeah, for swing positions is the same. Okay, the difference, I mean, maybe I need to add one more thing here. Okay, because your question made me feel subhashed that maybe there is something I didn't explain properly. So rules for weekends when using margin. If you are not using margin, It means that you are holding stocks, holding equities, holding ETFs in a non-margin account, and you're gonna close those trades every time you get in front of a weekend. I would say that probably you are too risk averse to be a trader. Okay, and I'm not saying that's you guys. I'm just making a statement here. Is that making sense? You probably have other reasons to get into this trade. You get into that stock because the trend was clear, the UFOs were clear, the dividends were high, the fundamentals were good, and now you are an investor. So that's why you are not using margin, right? So the comments I made are only for margin trading, where the gap risk that happens over the weekend can hurt you more than expected because you have the gap and you have the margin. Okay. So when you are doing trades where you are not exposed to margin, such as trading stocks as a swing trader or ETFs as a long-term investor, then there is no need to do any of this. You just ignore the weekend. It's part of trading. By the way, stocks close every day. So to be honest, you have gap risk every day, right? Not only over the weekend, you have gap risk every single day. Okay, so this applies to margin products. That's where you really have the biggest problem. Okay. Okay, everybody, so let's switch. Okay, so we are now switching to Q&A. I have a question from Lisa earlier, and please feel free to type your questions, okay, because I'll be taking care of Lisa's question, and then I'll take care of the other questions that we have in the chat box, and then we'll conclude the session today. Okay, so make sure you type it. This is the time to type if you have any question. Okay. So Lisa, you're talking about that during the get-together sessions we focus on the S&P and the Nasdaq, but what are other symbols that we could also use? So basically the answer, it's very simple, and the answer comes in this slide. Okay, guys, give me just 1 second. Okay, everyone, I'm back. So the answer comes in this slide. So in this slide, you have a summary of what I would call the most liquid futures markets that trade in US exchanges, and therefore probably the best markets for us to use for intraday. Okay, probably the best markets for us to use for intraday. Okay, but also, even though all of these could be used for intraday, and that's why they're here, if they were not to be good, they would not be here. At the same time, you can clearly see a major difference, okay? And again, because we're talking about intraday, I'm looking at the column on the left, okay? You could certainly use the column in the middle and the column on the right as well for intraday, but that makes you more of a long-term intraday instead of a short-term intraday, okay? So I understand, I believe, Lisa, your question is more about the left side of the equation, okay? And if I'm wrong, please let me know, and I will also talk about the middle columns, okay? But now, when you look at the column on the left, there is something that is, I believe, very clear, very obvious, that you identify very easily. Which is that as we go down in this table, okay, the figures that you have on the top, 2,500, okay, become 34. So even though it's not directly linear, because you have 55, 34, 55 again, okay, or you have 377, 233, and then 2000 again. So it's not like it's linear, because this is sorted by groups, isn't it? So what you have on the top is equities, what you have next is treasuries or interest rates, then you have energies and metals, then you have currencies. So this is sorted by groups, so it's not directly linear, but somehow you can clearly see that the markets on the top are much more liquid compared to the markets in the bottom. This has an impact. You could certainly use all of them for intraday, but I would strongly recommend you not to use the ones in the bottom. And why is that? Well, because if the liquidity is less, this will have a direct impact on what we call the bid-ask spread. The spreads are going to be wider, and therefore you will get greater level of slippage with the markets that you see in the bottom part compared to the markets that you see on the top part. And why is that problematic? Well, that's problematic because when you trade for short-term intraday, we are using the 2-minute time frame, we're using the 37 share bars, we're using the 21 tick bars, and what happens with that? What's going to happen with that is that the UFOs are going to be very, very narrow. And very narrow means that the distance between what your entries and your stops would be is very close. So let's say the distance is 4 ticks. But now, because of lack of liquidity, your slippage is 2 ticks. So next thing you know, you have 6 ticks of risk, even though the UFO is 4. So what's the problem with that? Well, the problem with that is that you just increase 50% the risk. So 50%, what I mean by 50% is going from 4 to 6. Going from 4 ticks of risk to 6 ticks of risk, this is a 50% increase in risk. Okay, you have seen, very good, Lisa, you have seen UFOs that are 1 tick only, right? So this is great in the theory world, but you should not trade it, because you may get more slippage than what the UFO has identified. I mean, the UFO has identified the on-field orders. The UFO has done its job. The problem is that if you were to execute at that price, you would be exposed to suffering what the market makers do, which is to take advantage of the traders in the form of arbitrage, which is fair. But when the liquidity is too low, the arbitrage is too big, and that's what we call slippage. Okay, so it's not useful anymore. So basically, the best markets for you to trade for intraday would be all the equities. Those are great. All the treasuries. Those are great. Energies and metals. Fine. Fine. Certainly less happy with the 3 in the bottom than the 2 on the top. Okay? Currencies. You can see here the euro, the yen, the British pound, right? So certainly happy with all of these, but certainly happier with the ones on the top compared to the ones in the bottom. Okay? So if you look at what I'm pointing at, for the very short-term intraday, where am I drawing the line? I'm drawing a line in the sand anywhere between the 233 and the 144. I am not delighted to trade markets intraday, like for example the Swiss franc. Why? Because 55 is below 144. I am okay with the corn and the soybeans. I'm not okay with the wheat, with the sugar, with the coffee, with the live cattle, lean hogs, cotton, and cocoa. Not happy. Why? Below 144. So if you're not picky, Lisa, anything above 144 is okay. If you are picky, then ignore the 144 and make it a rule to not to go below 233. If you don't go below 233, which markets are you left with? You would be left with the S&P, with the Nasdaq, with the Dow Jones, with the Russell, with the 10-year, with the 5-year, with the 30-year bond, crude oil, and gold, the euro, and the yen. And this is 2, 4, 6, 7, 8, 9, 10, 11 markets, which is more than enough to have plenty of trades every single day. You tell me, I'm a super machine, I want more. I got 25 computer screens at home. Okay, so open the door to the 144s. So now you add natural gas and copper. You add the pound, the Aussie dollar, and the Canadian. You add the corn and the soya beans. Okay, and that would be 2, 4, 5, 6, 7 additional markets. That would be a total of 18. But more than that, for the short term, I would not recommend it, because the slippage is going to hurt you too much. Could be that someday you have a good trade, but through time you would get frustrated with the slippage, and not a good idea. Okay, so because it's no need, then I just said it, no need. So if you want to trade markets such as live cattle, lean hogs, cotton, cotton, cocoa, well, notice that now if you move in the group of the middle, well, now here we're reaching that that very bottom threshold that I'm not in love with, right? If you want really to do a better job, then you would move to the one on the right using the 4-hour and the 21 minutes. Okay, and now you will be in a better position. Okay. So let me know, Lisa, if this answers your question. Okay. Okay. So good. Subhash, when price is trading in range in a common time frame and the trend is up, I got few times stop out on the edge time frame. Do I need to take care when price is trading in a range? I'm not sure what you mean trading in a range, Subhash, because the methodology that we use has you look at the average, okay? And apart from looking at the average, you look at the average and the close and the prior close, and then you look at the DMI. And if they are the same color, then you know you have a strong market condition. It's a non-market. If the close is below, like for example here, below the average, and you have a red DMI, you have a strong market condition. In this case, it's a down market condition and it's strong. Okay, now sometimes you have a contradiction, which is when the market closes below the average, but the DMI, okay, is blue. It's not red, it's blue. You have a contradiction. So then we call it a weak market, and what we do is that we set targets which are closer. But in our methodology, there is nothing that we call a sideways market, because that's a valid term to be used by a market analyst. I believe it explains very well for a person who is not a professional trader what the market is doing. It's going sideways. It's a nice way to explain it. It's easy to understand by everybody. But from a trading point of view, if that was to be true, then the right action would be not to trade, because the market is not going anywhere, right? So what would you trade? So, you know, what we define in trading, again, it's basically, and again, I know we may be saying the same thing with different words, but again, just to make sure you're with me. So in the world of trading, you have to differentiate between two groups. One group is the market analyst, which are very well educated professionals, where their job is to do market analysis. And then we have the traders, which our job is to catch moves. Okay, it's not to explain what's happening or what happened, it's to catch moves that haven't happened yet. It's two different worlds, it's two different professions, and therefore we use different rules, different tools, different terminology, right? And you know, I'm very purist and not mixing it, okay? Because if you mix it, you know, sometimes it may get you in trouble, okay? So just using your question, Subhash, even though again I'm repeating myself here, we may be saying the same thing with different words, but I'm using your question kind of to re-summarize something important for all of us to know, okay? Yeah. So certainly when a market, and now I'm coming back to your question, Subhash. So certainly when a market is not in a strong condition, and therefore your targets are going to be closer, and also your probability is less because it's not a strong condition. So something that you could do is not to trade. So you can make it a rule. Okay, you can make it a rule to trade weak and strong conditions. You can make it a rule to only trade strong conditions. That's my favorite choice. Okay, I prefer to trade strong conditions. Actually, you have seen me do that. You have seen me open my list of currency pairs in the trading sessions, isn't it? And when I go over one at a time, what am I doing? So with the left part of my eye, I click on the currency, and the first thing I'm looking is, where is the close, what's the color? And if it's not a contradiction, I'm open to plan a trade. If it's a contradiction, I just go for the next one. Why do I do that? Because a strong market carries higher odds, and because I got plenty of currencies or plenty of futures markets, then I can afford myself to not to force a trade. Okay, so that's what I do. But also, you know, if you want to be more active, it is not a crazy thing to be done to take a trade when the market condition is weaker. Okay, it's not a crazy thing to be done, but a stronger market condition is preferred. Lisa, yes, when you evaluate each symbol, you use 1597 bars for stats, correct? Yes, when I'm looking for the stats to understand if that market it's traded by institutions that tend to leave their orders, so the orders get filled, then I'm always running a minimum amount of data, which is 1,587 bars. You can run more. If you were to run less, it's fine too. But certainly you don't want to run a very small number, such as 100 or 200 bars, because then the sample that you're getting is too small to have any meaning that is significant for that statistical measurement. So I happen to use 1,597 because, you know, above 1,500, normally TradeStation, begins complaining because of the limitations of how TradeStation uses the RAM memory, isn't it? And it also happens to be a fib number, which, just to not to have to think about it when I have to take a decision about a number, I will always run it up to whatever next film number is. Okay, so that's what I do, just so I don't need to think about it. If you were to use 1,200, it's just as good. Is that making sense? Lisa, I have seen UFOs that are one tick. Yes, you're correct. Lisa, nice. Your analysis follows the markets I have been evaluating. Very nice. Liquidity is the key. Yes, is the key. And by the way, I'll add one more thing, Lisa, now that you said that. Liquidity is the key because of slippage, which is my whole point earlier. But liquidity is also the key because if a market is traded by large market participants, then liquidity will tend to be great, right? And you want that because you don't want to buy a market, you don't want to buy a currency, you don't want to buy a commodity where you are the only guy in the whole planet together with, you know, two of your friends buying it, because you together with two of your friends, you know, we don't have the power to move the market, isn't it? So then you always want to join larger market participants who have the power to produce a move. Somehow you are more likely to find those guys in a market with high liquidity than a market with less liquidity. Okay, and by the way, you can also see that when you run the UFOs because you get the stats. Okay, so if you apply the UFOs to, for example, a penny stock, you know, you would see in certain cases, in certain periods of time, it worked amazingly well, which coincides with the time where some institution entered. But then there are certain times where the UFOs would not work at all with those penny stocks. And why is that? Well, because they are penny stocks for a reason. No one is buying them. If the large market participants were to buy a penny stock, then it would not be penny. It will go up in value. Is that making sense? So it's important for you to understand the implications of liquidity as well, okay? Great. Orlando, how about stock trading? I'm not sure your question falls into which context. Would you mind to rephrase it? You're talking about liquidity or something like that? Because if you're talking about liquidity, basically it's the parameters in the scanner. Okay, that's the answer. So, and please, I would love if you could confirm if that's the case. But in the meantime, let me bring it here. So if you look at the scanner, for example, for directional trades, okay, you look at the customization features for the scanner, scan criteria, looking at least 500,000 shares for the shares and 100,000 for the options, okay, open interest. So again, that would be your parameters for liquidity, okay, and this is for swing trades because we have never traded stocks intraday, which you could. But again, why would you, given the fact that you got 24-hour markets with Forex and futures and more leverage, right? So even if you were to do it outside of the States and you do it with CFDs, you know, you get 10 to 1 leverage with the CFDs. With futures, you got easy 50 to 1, 100 to 1. So again, I mean, nothing wrong with it, but certainly no need, okay? Subhash, I am clear with methods and following a downtrend, strong condition. Got it. Lisa, by the way, since I got the right technology at TradeStation to help films and Planta, I have had no crashes using UFOs on up to 10 workspaces. Yes, I'm happy that you say that because, you know, again, don't get me wrong, please. I love TradeStation to the bottom of my heart. Sometimes it's just a little tricky to adjust it. You know, you buy a new computer, your computer has certain characteristics, and sometimes you just need to tweak a few settings on your Windows or whatever, and then your TradeStation just works so fine. But without doing that, then you have problems. And then when we add the UFOs on top of that, as you know, the UFOs are demanding because really the app is doing a lot of stuff behind the scenes. And obviously you want it to do it. So, you know, that may produce crashes. So nice to hear that you fixed your problem, Lisa. And, you know, that's a solution for everyone. If you ever have any problem with, you know, stability of your TradeStation, I know we always feel lazy about it because it's not the nicest conversation to have, but just grab the phone and get in touch with the tech department of TradeStation and just spend an hour conversation there. You know, it's worth it because then it's going to be very smoother. Yeah, certainly. You can do similar things with Thinkorswim. Yes, it is doable. Maha. Lisa, God will of death. Anyone else? Yeah, same for you. I was thinking purely trading stocks or the main ETF, but I fully understand the benefits of trading futures and currencies. Orlando, just to confirm, you mean trading the Qs, IWM, the diamonds, the spiders intraday, or you are talking about longer term? Good, Lisa. Yeah, Orlando. I never trade stocks because of the lack of leverage. Yeah. So yeah, maybe Orlando just stepped out for a little bit. Oh, you're here. You're back. Yeah. So you were talking about trading the Qs and all those ETFs intraday or longer term, Orlando? Yeah, I'd love to know. Just to confirm, I understood your question. Yeah, cool. Sorry for that, Lisa. Swing trading it. Yeah, for swing trading it, these are your parameters, okay? And even though here we're using options, okay, and maybe you want to buy stocks without the options, still use the same scanner with the options included, okay? Why? Because now you are filtering for the open interest of options too. And who trade options? The pros. And again, what did we want to find? We wanted to find signs of large market players, isn't it? So same rationale applies. A little bit not in the best shape ever. So we are keeping the session just a little shorter, guys. But I just didn't want to cancel the session, guys. So I know you guys are acting actively every week, and we need to stay connected. We're here for you guys. So I just wanted to be here. At least we got some questions answers, and also we talked about the weekend gap. So hopefully this was useful to you guys. Super pleasure for me as always to join you. My super pleasure, Subhash. Thank you for your comment, by the way. It's very appreciated. And again, super pleasure to be here. Keep up the good work. I will see you in a few days during trading during the weekdays. By the way, we will soon have the new calendar, the new schedule for August. You'll see some surprises there. Okay, we'll see some surprises. We will have a very important, amazing session on trading psychology. Okay, we will have a guest as well, like we did last month, or I should say, last month. Again, trading psychology is something that I never detach from trading. We have never done a session on trading psychology because I always talk about it, kind of like sprinkling it throughout the session because it goes together with trading, isn't it? You cannot detach it. But at the same time, I think it's an important topic, so it certainly deserved that we conduct one or maybe even more than one sessions to talk about trading psychology only. And again, we'll have a great guest and a great session. The topic is going to be really powerful and very eye-opener, guys. Very eye-opener. I've been involved in trading for years. And not only when it comes to my own trading, but also surrounded by many people learning how to trade during those years as well. And I have seen what being human means and what the impact of that human mindset and trading psychology implies in trading. And I've seen extremely intelligent people get in big troubles. It's very simple, guys. In life, there are so many times we don't know what we don't know. So many times, and sometimes we have the solution or the problem in front of us and we don't realize it just because we don't know what we don't know. And again, it's always fun to talk about trading and just get the UFOs on the screen, and we get very excited about it. But there are times where I think it's very healthy that we step up from those charts and we just talk about being human, being a person learning how to trade, and beyond that, being a person that now you master trading, and now you went from trading an account which at the beginning was 5,000, 10,000, 20,000, and now the account became 500,000, 1 million, 2 million. And now what happens? You're still using the 1% rule, right? But there was a time in your life where 1% risk was $50 per trade, $100 per trade, $200 per trade, where now the 1% rule means $20,000 risk per trade. And now you may be an amazing trader, but every time you take a trade, you're shaking. and I would understand that, if that makes sense, because we are human. So again, there are so many things to be discussed, and again, very exciting, what's coming in this month of August, so hopefully you will appreciate it as well. Yes, Subhash, can I ask one question? I noticed common change on common time frame with dot instead of candle. Yes, please go ahead. Oh, you mean why did I change it? If your question is why did I change it, it's just because I want to keep it simple. So nothing wrong with, let me cancel this window. Nothing wrong with coming here and just changing it to candles. It's the same thing. Okay, the close is above, the close is below. It's the same thing. But because the close, when you use, I just clicked in the wrong place. So when I use, so when I use my style of charts, if I was to select dot on close, okay, well, that means that the only thing I want to be plotted is the close, which is what I care about to determine what the trend is based on that methodology, isn't it? So it's good enough, and hopefully it simplifies it. Okay? Just like I changed the color to blue instead of red and green, just like I changed also the matrix from green and red, I changed it to other colors that are more neutral, because talking about trading psychology, I've seen traders that when it's green, no matter what, they get very biased to buy, or when it's red, they get very biased to sell, or when you see the matrix in red, they get very nervous and they close the trade too soon, or when the matrix is green, they get too excited and then they don't close when it's time to close. And so I just changed those colors to be something more neutral, just to help you guys with the fact that we're human, okay? Anyway, yeah, exactly. Very good, everybody. You guys take care. Again, loving getting together, but I'm gonna close the session now, okay? See you on the Tuesday. Bye bye, everyone. Take care.